Ask the Experts is sponsored by the Rivlin Group.
Hi there, I'm Dana Wagner. The real estate market constantly changing as we've seen. So we're asking our experts your questions. Joining us now with more is our sponsor, Alex Rivlin, with the Rivlin Group at eXp Realty. First of all, thank you for joining us. And I know that we had a question recently. Somebody was asking, is it better to pay a higher interest rates because we've seen the 30-year fixed mortgage interest rates go up? Is it better to pay that higher interest rate or say $50,000 over list? Which is better?
So really, it's a matter of picking your evil, right? When it came to the paying $50,000 over list, which is what we just came out of, right? That market, a lot of people were paying way over list. The interest rates are still going to affect your payment, your monthly payment, more than that paying over. However, where that meme was going and where that whole statement is based on is the fact that if you keep that $50,000 in your pocket and you pay a $500 a month higher payment, you've got now 100 months of money in your pocket to make that $500 extra payment, and likely the interest rates are going to go down before that time and you'll be able to refinance into a much more comfortable payment.
Okay, so you're saying you'd rather pay a little bit higher interest rate than the $50,000 over list?
Well, for me, yes, and for many others that would work better as well.
Okay, so we saw interest rates come down this week in response to good inflation news. Inflation is still too high at 7.7%, but below what most of the industry analysts had predicted. As a result, 30-year fixed rate mortgage interest rates came down?
They did. So the interest rates are much more fixed to the 10-year Treasury yield than they are to the Fed rates. So even though Fed rates are continuing to go up and likely will continue to go up a little bit more, the interest rates are tied to consumer confidence, and inflation is a major factor. So with the inflation coming in lower, that really had a great positive effect on the rates today.
We were getting rates at 2.75%. Those are gone, but you can get a rate now in the high fives, low sixes?
Yeah, based on qualifications, FHA rates are running in the high fives to low sixes today. And again, it's going to be something that you definitely want to check with your lender on. But I've seen a lot of people reach out and say, lock your rate today.
Okay, and you're saying that, I know that you're not necessarily an expert on interest rates, but you're optimistic that they could even drop in the future, meaning people would have the opportunity to refi.
Exactly. Barry Habib is an industry expert in the mortgage field, and he has analyzed the inflation. And last year's inflation, it started really going up quite a bit in these months. So the next few months, we should see much lower inflation than what we've seen in the past, and that will again increase the consumer confidence and ultimately impact the bank's sentiment on giving out loans at a cheaper price.
Good news for everybody. So if you have any questions out there, you can send them to Ask the Experts at news3lv.com, and your questions may just appear right here on the air. Thanks again for Alex Rivlin joining us.